Hello, everyone, and welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're talking about one of the most important investing topics for 2026: inflation protected assets and what actually hedges inflation. Inflation affects everyone. We see it in rising grocery bills, higher rent, increasing fuel prices, and more expensive everyday essentials. Even if your savings account balance stays the same, inflation slowly reduces your purchasing power over time. That's why investors are becoming increasingly focused on protecting their wealth instead of simply chasing returns. The big question is this: what actually hedges inflation? The answer is not as simple as buying one asset and hoping for the best. Different inflation environments impact investments differently, and the most effective strategy is usually diversification across multiple inflation protected assets. Let's start with one of the oldest inflation hedges in history: gold. Gold has been viewed as a store of value for thousands of years. Investors often move into gold during periods of inflation, economic uncertainty, or currency weakness because gold has limited supply and cannot be printed by central banks. Silver can also perform well during inflationary periods because it combines precious metal demand with industrial use in technology and renewable energy. While precious metals can experience short-term volatility, they have historically preserved purchasing power over the long run. Another major inflation hedge is real estate. Property values and rental income tend to rise alongside inflation. As construction costs increase and housing supply tightens, real estate prices often move higher. Rental properties can provide growing cash flow, while REITs, or real estate investment trusts, allow investors to gain exposure to real estate markets without directly owning physical property. Agricultural land and industrial real estate are also becoming increasingly attractive inflation-resistant investments heading into 2026. Next, let's talk about commodities. Commodities are often considered one of the purest inflation hedges because they represent the raw materials driving the global economy. We're talking about oil, natural gas, copper, wheat, coffee, and industrial metals. In many cases, inflation actually begins with rising commodity prices before spreading throughout the broader economy. Higher energy and raw material costs eventually impact transportation, manufacturing, and consumer prices. That's why commodity exposure can sometimes perform very well during inflationary periods. Now, for traders looking to access commodities, Forex, indices, and global financial markets, the Crystal Ball Markets trading platform at crystalballmarkets.com/platform offers a world-class, cutting-edge, and user-friendly trading experience designed for modern traders and investors. Whether you're a beginner or experienced market participant, the platform provides advanced tools and access to global opportunities worth exploring. Another important inflation-protected asset is Treasury inflation-protected securities, also known as TIPS. Unlike traditional bonds, TIPS adjust based on inflation data tied to the Consumer Price Index. When inflation rises, the value of the bond increases as well. TIPS are especially attractive for conservative investors seeking stability and purchasing power protection during uncertain economic periods. Dividend-paying stocks are also important inflation hedges, especially companies with strong pricing power. Businesses in sectors like energy, healthcare, utilities, and consumer staples can often pass rising costs directly onto consumers without significantly reducing demand. Dividend stocks offer another advantage because dividends can grow over time, unlike fixed income investments that remain static while inflation rises. Now, let's briefly touch on Bitcoin and digital assets. Bitcoin has gained attention as a potential inflation hedge because of its fixed supply model. Only 21 million Bitcoin will ever exist, which appeals to investors concerned about currency debasement and excessive money printing. However, Bitcoin remains highly volatile, so many investors view it as a supplemental inflation hedge rather than a primary one. Energy investments are another area worth watching in 2026. Oil producers, natural gas companies, pipeline operators, and renewable energy firms often benefit when fuel and electricity prices rise. Since energy impacts nearly every part of the global economy, the sector has historically performed well during inflationary periods. So, what's the best strategy for investors moving into 2026? Diversification. No single investment perfectly hedges inflation under all conditions. A balanced inflation-resistant portfolio may include asterisk precious metals, asterisk real estate, asterisk commodities, asterisk dividend-paying stocks, asterisk inflation-linked bonds, asterisk energy investments, asterisk select digital assets. Investors should also stay informed about central bank policy, interest rates, commodity markets, and broader macroeconomic trends because these factors heavily influence inflation and asset performance. And if you want to continue learning about inflation, investing, trading psychology, and financial markets, be sure to check out the Crystal Ball Markets podcast at rss.com/podcast/Crystal Ball Markets. It offers beginner-friendly discussions and practical insights designed to help traders and investors better understand today's fast-changing financial landscape. As we wrap up today's episode, remember this. Inflation is one of the biggest long-term threats to wealth, but the right inflation-protected assets can help preserve purchasing power and strengthen your portfolio over time. Gold, real estate, commodities, dividend-paying stocks, tips, energy investments, and digital assets all offer different forms of inflation protection, depending on your goals and risk tolerance. The key is building a diversified strategy focused on real economic value, long-term resilience, and smart risk management. Thanks for listening to Financial Market Insights for Traders. I'm Sophia, and I'll see you in the next episode.